How's it going, everybody? It's your boy KcgTRADES, and today I have a very special video for you guys, as I will be talking about the differences between trading the Forex market and the stock market. Now, ever since I've been making YouTube videos and let it be known that I trade the stock market, a lot of people have been asking me questions about the Forex market, thinking it's the same thing. So, stay tuned to get a better understanding of the two. Before I begin, investing and trading is something I encourage everyone to try out. But the most important thing to remember is when you are trading live, your capital is at risk, and there are no shortcuts to the game. I see a lot of people get sucked into trading because a lot of fake gurus or pyramid schemers post their trading profits, enticing a new naive trader to join their company. They say by joining them you can make a certain amount every day and you'll get free trading signals as long as you become a member in their company. And usually 3 months later that trader loses everything while the company profits off them and then moves on to their next victim. I've seen this one too many times, which is why I emphasize that you cannot cheat the game. It will bite you in the ass. With that being said, when done right, trading the Forex markets or the stock markets can be very profitable. But here are the main differences between the two. Number 1, market hours. For the stock market, it is only open Monday to Friday from 9:30 a.m. to 4 p.m. While the Forex market is open 24/5, meaning 24 hours a day, 5 days a week from Monday to Friday. So if you work a typical 9-to-5 job, you may look at Forex as a good option to fit your schedule. Number 2, regulation. Stock markets are traded at the stock exchange, such as New York Stock Exchange or the NASDAQ. And it is regulated by the SEC, making it very safe for you to put your money in because of all the rules and regulations set in stone. While for the Forex market, it is done over the counter, or OTC for short. There are no centralized exchanges like the stock market, and transactions are done privately between buyers and sellers. Now, this can make Forex a bit risky at times if you're not using a well-known, trustworthy broker. Number 3, short selling. Now, with margin accounts, you can short sell both in the stock market and in the Forex market. The only difference is there are much more rules and regulations in shorting the stock market as compared to the Forex market. There are a few tests that you have to basically qualify for in the stock market to be able to short sell, while in the Forex market you are able to short sell at any time, any place, anywhere. Number 4, cost of entry. Now, like I said in point 3, the use of margin and leverage is used in both the stock market and the Forex markets. And if you don't know what leverage or margin is, it's basically borrowing capital to invest more than you could originally afford. Now with the stock market, the leverage is usually about 2 to 1, but you do have to pass qualifying requirements for you to get that. While in the Forex market, the leverage is much higher. You could get leverage as high as 200 to 1, so if you put $1,000 in your trading account, you can have a $200,000 trading account. This is why the Forex markets are very appealing to new traders, because you can make a lot of money with very little. While in the stock market, you need to invest quite a bit of your own capital to have decent returns. Although it is quite appealing to trade the Forex markets, you must remember that as much as you can profit big, you can lose just as much. And in some cases, when those losses are big enough, your broker may actually give you a margin call telling you that you actually owe them money or they have to close all your positions. And lastly, trading speed and complexity. Now, the Forex market has a superior liquidity compared to the stock market, which means whenever you place an order in the Forex market, they are executed immediately because they are done over the counter. There is no delay when you place an order as compared to the stock market. Now, sometimes in the stock market, it takes a while for your order to get filled. The reason is because there is a broker handling all of your orders. And in the stock market, when you buy, someone is selling. So there are times where you can't get filled in the stock market because when you're trying to buy, no one is selling at that price. Which is why sometimes it takes a while for your order to fill, because the stock market is waiting for someone to sell at that price for you to get filled. Now, of course, there are both pros and cons to trading both the Forex market and the stock market. And it's really up to you to decide which one you feel more comfortable with. You can also trade both. No one is stopping you. I'm not here to tell you which one is better or which one is worse, but I do hope this video has helped you get a better understanding of the two. Once again, if you liked the video, please hit that like button, share with your friends and family, subscribe if you haven't, and I hope you guys have a wonderful rest of your day. Take care, guys.